Welcome to Prosperitrade. Thank you for joining us. Today we're going to do a quick recap on our due diligence on exact science. If you want the full video, please see below. Full video is attached. And we took a deep dive on exactly what the company does, the history of the company, acquisitions, and we actually had a medical board certified doctor oncologist that kind of helped us out and broke down why he's bullish on the company and what the company does. Before we begin, just a quick disclaimer. Prosperitrade, we are not registered as investment advisors. Anything you see here today is for the sole purpose of education. So Exact Science started off in 1995. Their first product was Cologuard, and it was an alternative, or meant to be an alternative, for colonoscopy, which is a procedure which they basically take a look inside of your rectum and colon, and it's a flexible tube. And the positive, and the reason that the colonoscopy is still the gold standard, because it's more accurate than the Cologuard. And if there's polyps, which Cologuard can't detect 42% of the time if it's an early polyp, they're able to remove the polyps. And the polyps are what can turn into cancer. But the Cologuard still is well known amongst doctors. It's well known amongst GI doctors. And it's an alternative, especially if it's a healthy male, healthy female, if it's someone that's afraid, and it's really better than not doing a colonoscopy. So the company's compound annual growth has grown tremendously. And you see that in prior years, they started in the 90s. Their revenue was decent. They weren't profitable, but their revenue has exploded. And that's because they've acquired companies, and now they are able to do precision oncology. They purchased Thrive, and they've done COVID testing. So the company's definitely has increased their revenue. And the reason that I'm bullish on this company is because of their recent acquisitions. So they purchased Thrive, and they hope to be a leader in liquid biopsy, which is a test that can be done by taking the blood to look for cancer cells. Now, it's not the golden standard yet. It's a traditional biopsy where they take tissue and actually test the tissue is still used more by oncologists. But with further advancement in science, hopefully, liquid biopsy becomes the standard. But it is used. So they hope that them purchasing Thrive and more studies and more advancement, that they can one day use their technology to be just kind of like standard test, standard study, standard evaluation, and finding that breast cancer. So although breast cancer and colorectal cancer both are top cancer killers, they also can be prevented. And if colorectal cancer, for example, is found early, it can be cured 90% of the time. So Exact Science also teamed up with Mayo Clinic, and they're hoping to use genomics. They've purchased TARDIS and use genomics to find biomarkers that are associated with 15 of the deadliest cancers. So they have big goals. So their goal with precision oncology is to find the right medicine for the right patient at the right time. And also with proper precision oncology, doctors hope that, they don't give chemo to the wrong patient or to a patient that doesn't need it because of the toxicity associated with chemo. So they've also purchased Oncotype DX, which is very well known in the oncology world. And actually, when I had the oncologist here, he spoke about how they use Oncotype right now, and it's very well known for precision oncology. So the overall goal with Exact, they want to be a part of every single one of these steps in the cancer. In the screening, they already have the Cologuard and the Thrive for breast cancer. In the prognosis, they use Oncotype, minimal residual disease, to see if there's leftover whether it's leukemic cells or any other disease that can be found or detected. So they want to detect those these residual diseases early, so that they can find a make sure that the cancer doesn't come back, or treat it early. Reoccurrence monitoring and therapy selection. So there's a big market opportunity with breast cancer, with colorectal cancer, with precision oncology, billions and billions of dollars that they hope to capture. Just like with breast cancer, there's multi-billion-dollar opportunity. Having the right treatment, the right therapy, having the science behind being able to choose the right therapy for the right patient, using genomics, using early screening, it's a multi-billion-dollar opportunity. This is another one of their acquisitions, Oncotype Map, and they'll use genomic profiling to aid in their therapy selection, and that's another multi-billion-dollar opportunity. Detecting for minimal residual disease, which is the post-cancer patient, making sure that there's nothing that shows that the disease is going to come back, and just being able to monitor it is a $15 billion opportunity, and it's definitely going to help with reoccurrent cancer, with patients that were diagnosed with cancer in the past. And really, this is what kind of excites me with EXACT, all the acquisitions that they've made that are going to help them be a big part of the cancer fight against cancer. So TARDIS and Thrive and Base Genomics and Paradigm, all these are going to help with genomics, with precision oncology, with testing, with monitoring for minimal residual disease for post-cancer patients, diagnosing and finding cancer early, finding the right treatment for the right patient. And again, this is that chart that they had, and how their acquisitions are going to help them be a part of every stage in cancer. Like I said, the Cologuard, the Thrive, the Base, finding the colon cancer early, finding breast cancer early, using genomics to screen and make sure that the patient's not prone to cancer, the Oncotype DX and Genomic, finding the right therapy selection, monitoring minimal residual disease for cancer patients that are post-cancer, and they want to be a part of every step here. Therapy selection using Oncotype Map. So if you look here, we got big names that are invested in this company, from Rowe Price, Vanguard Capital, BlackRock, ARK, Wellington Management. And ARK is really big on that disruptive technology. They've purchased $646 million worth of shares, which are 5 million shares. They've had a 900% revenue increase. So they've gotten in early. Price rose, gotten in. They're down 17%, but it's still a strong hold, big portion of their portfolio. So like we've shown before, how they went from a couple million, 39, 99 million, $250,000, and all the way to $1.4 billion this year. Now, they're still not profitable, but let's take a look on how they're spending their money. So if we look here, they've made $1.4 billion, which is the most they've made in the last 5 years. They've had a compound growth of 75%. But last year, they spent $139 million on research and development. This year, almost $500 million on research and development. Over $500 million on sales and marketing. So they're really taking all that money, all that profit, and they're not profitable, but they're reinvesting in themselves. They're setting themselves up for the future. So how do other investors feel about this company? Well, let's look at that. We have some of the top investors here, all 5-star investors, giving a price target of 180, 185, 163, 180, 165, 154, 226. So the lowest is 154 and the highest is 226. So this company has a lot going for it. My thesis is that this company is positioning themselves by all their acquisitions to be leaders in the future. it's always great when a company takes their revenue, invest in themselves, they have cash on hand, they can really have enough runaway cash to maintain themselves for the next few years if business got slow or whatever happened. They have a multi plan approach to cancer, and along with their Cologuard and their liquid biopsy and their genomics, they want to be a part of every part of cancer, using CancerSeek to find high sensitivity cancer test. So there is some risk, of course. There's the competitive risk. They have Illumina and other companies that are already involved in precision oncology, but they do plan and to be more accurate than Illumina. That's kind of their goal. So there is competition risk, operational risk. You know, if they fail, if they have any bad publicity, if any of their tests, doesn't detect, or their percentages lower in detection, of course, you know, there's that clinical risk of it. So these are things that we have to worry about. I'm recommending buy now. I made this video a couple days ago, and I initially said because of the macro that it was a high risk. And I showed a chart where the stock dropped to the 200-day moving average, which was around 112, 116. But, you know, at 122, I think there's still a 65% upside. And I'm basing that number off of their potential revenue growth. You know, they're trying to tap into a multi-billion-dollar market, and they've grown year after year. They've had a compound annual growth rate of 75% over the last 5 years. And I don't think they're going to continue to have such a high growth rate. You know, I'm a little bit more conservative. Last year they made $250 million just off of COVID testing. So I think they can still depend on that for the next year or two. I think as their technology becomes more widespread in all hospitals, not just major hospitals, but community hospitals, they're going to see more growth, more FDA approvals. They have Cologuard 2.0, which they expect to get FDA approval for. I'm giving a price target of 195, and I think this is a great stock. I am invested in this stock, just to be clear on that. I do have a position. And that concludes our video. Thank you for joining us on Prosperitrade. We hope that you enjoyed the video. If you want to see the full video with an oncologist, board-certified doctor, and take a deep dive in the company, please click on our other video. And we look forward to making more videos where we discuss technical analysis, fundamental analysis, day trading, swing trading, option trading. We like to discuss it all. And thanks again, and have a great day.